Welcome to the daily update, where I'll go over the action in the market for Thursday, September 12th, and then we'll see how things look for Friday, September 13th. Okay, well, it looks like we're switching back positive. It depends on how you look at it. If you count it as being above the 20-period moving average, okay, we're positive. Our indicators, some have turned back to positive, both in the short and intermediate term. Some are still negative, but improving. So we don't necessarily have a full-blown positive situation right now, but we keep going up. And this positive seasonality that we see towards the earlier part of September, now going into the middle part, seems to be coming back into play now after it looked like things were turning more negative. Now we're switching back positive. Please feel free to check out the SPX Investing Program. It's free. And if you want to know more about this program, there's a video that you can watch. There's a link. It'll take you to the website. And if you have some questions, you can email me about this. You get early access to the daily and weekly videos. Also, the daily video is the real foundation of all the different videos that I post throughout the week. So let's go back and talk about what happened. We had a flat open. Now, we were gyrating around. We were a little bit negative, and then PPI came out, and we didn't really move all that much. And it looked like, okay, this was going to be a really boring day. Not really all that much is going on. We chopped above, mostly above, but we dipped down a little bit below the unchanged level at times. And then all of a sudden, things started to pick up after we got the open finished. The smart money started to come in and prices broke out of this sideways range that it looked like it was going to stay in. We climbed above 5,600, but we didn't get up to R1 at 5,607. And we closed pretty much at the high. We were up 0.75%. Now this is, we were below average with volume. Okay, so not as healthy as it has been. And we are switching back more to positive in the short, intermediate, and we always were still positive in the long term. We're watching the inflation interest rate scenario. The market seems to feel that this is more friendly, at least for the time being, with the anticipation coming that there will be rate cuts on September 18th. Some comments. There was real muted reaction to PPI. It didn't really gyrate the market all that much. And the mega caps and semis outperformed. Now, this is what we're seeing starting to come back in, and this is what's helping the indexes to go higher. And now the ADX, which had been switching over to negative, and it still hasn't really gone positive yet in a trending sense, but we are seeing the green line coming back above the red line. But we're still below 20 with the ADX, and we're below the moving average. And I'll show you that chart later. And the 20-period simple moving average has been regained. So that's kind of the basic thing that I use to determine if we're positive or negative. If we're above the 20, we're positive. If we're above the 50, we're positive. If we're above the 200, we're positive. And then I let all the other indicators say, okay, what is the condition of that positive type of trend? We do have an initial Hindenburg omen that was triggered, but we haven't seen the confirmation signal yet. And we have until October 3rd for that to happen. And the only thing that's showing up on our list is the 200-period simple moving average. Okay, it's looking a little extreme, but at the same time, that's just suggesting that the long-term trend is still positive. Really no change to the scenario. The Fed will be coming in and cutting rates. They pretty much have said that. It's how much are they going to be cutting rates? The dollar was down and interest rates were up. And interest rates have really been going down a lot lately. So the fact that they were up really didn't put much pressure on stocks. And the dollar going down may have given some support to stocks. We closed at 3.68% with the 10-year yield, where we had been at 3.65. We're still inverted with the 10 to the 3-month. The 10 to the 2 is back to being normal, or what they say uninverted. And sentiment didn't change, even with the update. We're up 0.75%. But the strange thing is, in Wednesday's session, we were up, but sentiment actually ticked down. So we'll just kind of take this and see how it plays out over time. but we're still negative at 43. We're getting close to that neutral area where we had been at 43 before. Here's where we're seeing some kind of flip-flopping and changing. We're not trending right now because we haven't crossed above 20 with the ADX. We crossed above, and now we went back down below it. We're kind of right on top of each other. The green line is just barely starting to cross above the red line. So I could have easily changed this over to positive here. And the bias, again, with the up day, we are positive, and the momentum is also positive. So the economic reports that came out, we had the weekly initial claims bracket. For some reason, that should be a colon right there. Came in at 230,000, which is just a little bit more than expected at 229,000, and up a little bit from the 228,000. So not a real big change there, not a drastic number that was coming in. And the continuing claims went up as well, 1.85 million. Last time it was 1.845 million. And the PPI, the headline number, came in as expected, up 0.2%, where last time it was unchanged. This could have freaked out the market. The core PPI, this is the inflation part that the market can focus on. It was up 0.3%. Last time it was up 0.2%. They expected it to be up 0.2%. Last time it was down 0.2%. Treasury budget, just more and more money is being spent. So it's getting to an even larger negative number now. Okay, so here is looking at the final demand PPI year over year. The blue line is the total where it's going down. The core is actually turning and going up. Again, the market could have looked at that and freaked out and tanked, but it didn't. And then looking at goods versus services, where we're seeing goods coming down and actually dropping somewhat negative, and services are turning back up. And then intermediate goods on a year-over-year basis, processed versus unprocessed, where we're going down with the unprocessed and turning down just slightly with the blue line, which are processed goods. Here is our chart showing on a year-over-year basis, the rate of change going back 12 months, where we are starting to come down, and we're also going down on the month-over-month rate of change, and flattening out and coming up just a little bit with the core PPI, and going up on the month-over-month basis since we saw an increase there. Weekly jobless claims turning back up. The moving average had been declining, but it's starting to go back up a little bit. We'll see if we're going to actually see a change in trend going forward from here. And the moving average is still coming down with the continuing claims, even though they did go up slightly in the latest reading. And putting this in context, where we have the latest unemployment rate, which ticked down to 4.2%, a little bit of a tick up with continuing claims as well as initial claims. Then looking at this, and I've put this up before. They really haven't changed anything on this chart from the last time I showed it. And members that go to the website, I did a video on the recession update, because it's the NBER who says whether or not we are in a recession. The only problem with that is they look at a lot of charts, but a lot of the data for those charts is quite late. So by the time they actually declare that we are in a recession, we're going to know that anyway, and it's going to be late as far as getting it. But this is when it will be official. But if you want to see the charts that they look at, please feel free to go to the website and watch that video. And this is one of those charts where I have to try to blow up this white and blue box here because it's almost impossible to read. But this says September 11th was a huge day reversal, which it was. We were really going down, and we ended up testing the low from last Friday, and then we just bounced up out of that. Well, how do things look going forward? Well, we're up 77.3% of the time a month later. Also, 3 months out, not as quite as good 6 months out, and not quite as good 12 months out. So this tends to be more of a shorter term type of an impact on how a price behaves after that. And then the average performance through the year since 1928. I have a number of seasonal charts that I put up at the end that actually break it out based on an election year and those kinds of things. So from September 2nd down through about October 22nd, this tends to be a real weak seasonal time. We were looking like we were going lower, but at least for the time being, we seem to be going back up. The risk appetite. Now, this could actually end up helping stocks because the risk appetite, people are getting out of these riskier types of things, which is what we were sawing last week. And because the folks here are thinking that we're going to be going down. And this can be used when we get to kind of an extreme reading. Both of these can be considered to be a contrarian indicator. And then the consensus forward PE. And I show a version of this chart every week when I do the intermarket analysis chart or video. But this just shows you the forward-looking PE. This is for the okay, this should be the really big companies, because the small caps are not green. The small caps are way down here. And then we have the S&P itself right around 21, so it's above that 20 level. And then the mid caps are right around 15. The chart that I show has the small caps down around between 14 and 15. So what I see is contradicting what you see here in this chart. And then small cap, just showing how they're remaining historically cheap, but that doesn't necessarily mean anything, because cheap is a relative term. Or just because it's at a lower price, are you really buying something that has potential value to grow? And a lot of the market, there's been these breakouts with the small caps, but then they've been falling back. And so if there was real value in there and the market really thought that, then small caps would be doing better than they are. But we're down to this lower level where quite often, sometimes, at some point, the price of small caps will fall low enough and there'll be enough value to justify buying, and that can push things back up. Okay, and then the rate of change in the S&P 500 divergent from job openings, where we are seeing job openings leveling off here, but the S&P has been going back up on a year-over-year basis. And there are times when they get a little bit out of line with each other, but as a general sense, they tend to move in the same direction here. And then this is the systematic strategies. This just means that you get into a program and you don't deviate from that. You don't change it. You follow, let's say, getting into S&P 500 index funds, which are a passive investment, and you just stay in that. Or you have some kind of a system that no matter what's going on with the stock market, you don't deviate from that system. And this had been showing some weakness earlier on, but now it's showing a little bit more strength. At least it's positive here. And the mega cap growth and tech positioning ticking back up after it had been coming down. And then broadening out, the Magnificent Seven expected to decelerate while the rest of the market is expected to move. This is looking out with the quarterly earnings on a year-over-year basis, where this is really what's been driving things. Well, this is starting to come down, this dark blue area here, where we see the light blue area starting to show an improvement. And that's what we're seeing when we look at the S&P 500. We're seeing the broader index doing better than it had been, and we're seeing the NYSE doing better as well. That's another broad index. I didn't really spend any time on Twitter there. So here is our intraday chart where we pretty much had a flat open. It looked like, okay, we were going to go down, but then we came right back up. But then we just spent a lot of the opening period of time right around the unchanged level. And then later on, we just started to creep up higher and then actually break out. We got up to the 5,600 level. We never got up to R1. And then we were able to stay up here. There was a couple attempts to sell, but was quickly met with more buying, and we closed just a little bit under the 5,600 level. And really, we were pretty much flat in the initial overnight session, but then things started to improve. There was a little bit of a dip reaction here to PPI, but that was quickly done away with. And then the improvement, as we saw going into the close, and a little bit up in the initial overnight session. This is improving, but still a bit of a concern to us with the 10-minute intraday chart of growth versus value, we want to see the blue line above the red line. Now they're getting a little closer together and both are going up. So there's an improvement here. And growth's had a good couple of days over the last few days. If that can continue and we see the the blue line above the red line, that's going to help things even more. And this is improving for the S&P, where we topped out back in around August 20th, 21st. And then as the market was under pressure, we see this ratio going down. Now it's starting to show some improvement. And as long as that can still continue, that should be more positive for the S&P. There's our end of day chart. Growth was up quite a bit more than value, even though both were up. We were up a little bit less with the mid caps and up more with the small caps. So seeing after bouncing back up, we actually declined here with small cap growth to value. We were flat with mid cap growth to value and flat here with S&P growth to value. We want to see this ratio continuing to go up if we're actually turning more positive. And we are seeing some improvement here. We're coming back up into the rainbow when we look at the growth versus value ETF. And what would be even more positive is this ratio to continue to go up and break out above the rainbow. Seeing some improvement here, but we want to see more follow through when we look at discretionary versus staples. Large cap growth is doing good. It was able to get back above its 50-period moving average and is really showing some improvement currently. This is where the ADX is kind of confused right now. We were starting to break out with a confirmed trend. We just barely got above 20. We were above the moving average and the red line was on top. Well, since that time, we've been going down or up with price. And so the red line's been coming down, the green line's going up, and they're just crossing or just getting ready to cross. And that's confusing the ADX. So it's actually dropping back down below its moving average and below 20. And short term, still really seeing kind of the same thing. Not really breaking out at least yet, but it's trying to turn over to positive. If we see more follow through in Friday's session, both of these charts, the short term and then the previous chart, the intermediate term, should turn more positive. And we dropped down a little bit below average with volume in Thursday's session. Looking at sentiment, still showing we're kind of high here with the Ulcer Index, coming down with the VIX as the S&P has been going up. We're coming down to the moving average on the line chart, which is the closing value, and dropping them down to the moving averages with the bar chart. Also, when the VIX is down, the VIX of the VIX also continues to decline, even though it ticked up a little bit here on a closing basis. And we had been going up with the VIX as far as momentum. Now the MACD is starting to roll over and switching to more of the downside. And here is the seasonal chart. Now we do see periods of up and down seasonally, but overall the VIX has a tendency to rise going into October and then into the latter part of October. We'll see if we play out in a seasonal fashion this time. We declined just a little bit here with this fear gauge, and we declined with this other fear gauge as well. So we're seeing more confirmation that fear has been decreasing. And going back up here with the risk on versus risk off ratio, folks are tending to get more into stocks now as the S&P has been going back up. We did get the latest reading from the American Association of Individual Investors. They really dropped down. Now, this is a week ago. And these folks, which you and I are part of this group, you may even belong to this group. I have for many decades. Although I don't participate in the survey, but it's kind of interesting because people love to tell you what they think is going to happen with the market. But we really dropped back down because we were negative last week. And we are keeping an eye on this. And I just pretty quickly go to the next chart. This is an inversion of that previous chart. This is a little bit of a concern. We continue to go down here. That just means that there's more risk coming into the market when we look at the spread between risky and not as risky bonds. We want this to be going up on this chart. That would mean there's a decrease in risk. The equity put call ratio did decline with the up day on the daily chart. We're going down with the 5-day chart and starting to turn down more here with the 10-day chart. And the volatility risk premium coming down, but still in this band. So it's not really giving us any kind of an either high or low reading right now. And seeing some improvement here with the advanced decline line based on price and volume, but not breaking out above this previous high. But that's not really a concern yet because we haven't broken out above these other highs. When we were chopping sideways there for a while, and then we really broke to the downside, what we want to see, if we keep going up with the S&P, we want to see price break out to a new high and volume confirm that by breaking out to a new high. And we did see an expansion of the new highs, really no new lows being generated for the S&P, but we're still going down with the 5 and the 10-day. But this is still holding up and looking much better than it was a couple of days ago, and especially yesterday. A big improvement there. We are positive with the advanced decline ratio. We're above zero, both with the blue line and the red line. So we break this out with the advanced decline ratio based on price. We're above zero. And this was a negative divergence. We were below zero based on volume. Now we've been able to cross back above zero. And we're turning back more positive now with the accumulation distribution. We're above the moving average. The moving average, as long as we stay above this, the red line, the moving average, will continue to go up. And we're above the midpoint right now. So this now is positive. And the chicken money flow, turning back up with the red line, the histogram is going up. This is also positive. And we've turned back to positive with the chicken oscillator. We crossed back above the midpoint and are going up. So now we're seeing more confirmation with the three smart money indicators that we look at. Accumulation distribution, the chicken money flow, and the chicken oscillator are all now positive. The vortex is still negative with the red line above the green line, but the red line's coming down as the green line's going up. And ticking back up here with the S&P 500 advanced decline line based on price on a cumulative basis. And now this is kind of encouraging because we're seeing more of a breakout and more of an improvement here when we look at this based on volume. That could be positive when volume leads price. When we're going up, that's positive. When we see volume leading price to the downside, that's more or less, it's usually negative. And we look at the highs minus the lows here, where we are positive here, and then a 50-period moving average of that. We're still going down, but this is a 50-period moving average, so it takes a while for this to turn, go back positive. Here's the NYSE cumulative advanced decline line based on price going up here, and the NYSE regular advanced decline line is going up. And I guess I don't have that second chart. And these are the new highs, new lows with a 50-period moving average here. These are continuing to go up, and that's suggesting more broad market strength. And then we compare the S&P to the NYSE advanced decline line. These are pretty much going in lockstep with each other, even though they're on different scales. This is the other chart. I had it in the wrong order. We're going up here with this other NYSE advanced decline line. So seeing improvement along the way here. And then we look at the common stock based on price, turning back up, and we're going up with a little bit more velocity here with volume, maybe not as much here when we look at the NYSE version of this. And we're coming down a little bit with the large cap to small cap ratio. Typically what has happened when this is going up, that means the large caps are outperforming small caps. And that's what really helps the indexes go higher. But we saw this ratio decline slightly. Looking better here with the advanced decline line studies, turning back up with the NYSE common stock, the S&P, the mid caps, and improving, but still below the moving average with the small caps. So we're back above the 50-period moving average. I don't have the 20 on here, so this is showing more improvement. But we've got a lot of overhead resistance right now. We've got this sideways pattern that we were doing there for quite a while. We have the previous all-time high. If we continue to go up, we're going to have to break through that, hopefully on good volume. And we were just a little bit below average here with volume down below. Going back up with the 20, 50, and 200-period moving average study based on the S&P 500 itself. And the condition of our short-term trend showing some improvement here. We're above both of the lines, and the lines are starting to turn back up. So that's looking better. And we're back above the 20-period simple moving average. This is what I was watching out for before Thursday's session. Could we get above that and close above it? Yes. So that is turning the short-term trend back to positive when you look at it based on a moving average. And we're positive here above the midpoint with the Stochk RSI and not extreme positive. Also looking positive, but not extreme with the Williams %R. The CCI 14 is crossing above the midpoint, and the CCI 20 is also crossing above the midpoint. And we see our stochastics here going up in the short term and intermediate term, turning more positive. We're trying to turn back up here, but haven't quite crossed back over positive long term. And you might hear a truck in the background, and I forgot to close the window. So just consider that ambient background noise here, just at no additional expense, but at great effort. The force index is back above zero and actually advancing here. So that's turning the short term back to positive as well. We crossed back above the midpoint yesterday, and we were able to stay above that. We're at the high end of the +1 standard deviation channel, so we're not extreme there. We're going back up with our 20-period moving average study of those stocks inside the S&P, going back up with the 50-period moving average study, the 100 and the 200. Intermediate term, we're crossing back positive here with the balance of power. So we went above the midpoint and the condition of our 50-period moving average. Going back above both lines, if we can stay above this, both lines will turn and start to go back up. So we're seeing some improvement here as well. And we're above the 50-period moving averages. We reclaimed those after Wednesday, and then we got the 20s back after Thursday. And here's all of the different moving averages, and we're above all of the plotted moving averages again. We're just wondering if we can stay that way without going down, or if we continue to go up, that will flatten out these lines even more. We are still positive with the go, no go with the blue bars now, and we're above the midpoint and going up with the highest high value chart, but we're still declining with the TTM squeeze. We've actually dropped down to being negative. I'll have to see if that'll end up changing. Standard deviation is still above its moving average, but it is declining here. This measures the speed over the last 10 days. It doesn't measure up or down. It just measures how fast are things going. And it is dropping down just a little bit here. The ease of movement is still negative, but turning up and improving. And the Haroon, go figure, is actually declining here, but it's still positive. And the S&P McClellan oscillator, improving, but still below zero. So we're still going down with the summation index based on price, but we're starting to turn up here based on volume. And quite often we will see volume leading price. This could be positive if we see follow through with the price. And we're turning back to positive after we had been negative with the NYSE McClellan oscillator. It's really hard to see, but we're ticking back up here with the summation index based on price and volume. And looking better here with the Swenlin trading oscillator, just slightly negative based on price. We've crossed back over and are positive now based on volume. So this is really improving as well. The momentum turning up, but we're still negative. And when you break it out based on price and volume, they're still below their moving averages. Going back up with the PMOs that are rising, flattening out with the buy signals after it had been declining, turning up just ever so slightly with the PMOs that are above zero. And we continue to be positive with the Elder's Impulse system for the S&P. Here's another big change. This is a primary indicator, in my opinion. The parabolic SAR has now put a dot underneath. So that's intermediate term positive. We're still going down with a momentum, though. The slope oscillator continues to decline. The MACD turning up, but is also still below its moving average. So we're still going down with the short term, but seeing improvements here. Turning back up with the TSI, the MACD, the PMO, the PPO. We're still going down with our longer term oscillators. They take longer to move. And the Copic curve, trying to turn up a little bit here, but it's still negative, and showing some improvement here with the Sean trend meter, getting up into this kind of sickly green area, which is just showing that it's more positive. When we're down in this other sickly yellow area, that's more neutral, and we just kind of follow what is the line doing. Is it going either up or down? And this is, it's okay, the bullish percent index, but to be up again and to see the bullish percent index barely move, that's a little bit of a concern. But the fact that we're up, it's still positive and above 50. Just something we're keeping an eye on. This, you could take away from this that it's the mega caps, it's the semiconductors. It's not a whole lot of stocks that are really helping the S&P to improve right now. And ticking back up, but still positive with the NYSE bullish percent index. And this is a big one here. We had actually dropped to negative with the NASDAQ 100 bullish percent index since we fell below 50. Well, now we've crossed back above 50 and are going up. So that is positive again. And coming back and turning positive is the money flow index as well as the ultimate oscillator. And on balance volume is above the moving average and going up. That's turning more positive. And we're looking more positive here with the RSI 14 and 9. The 9 period is short term. The 14 is more intermediate term. We're crossing above the midpoint now. So this is showing good improvement with the momentum. And we're right at the high end of our 20 period moving average study here, which produces this little mini rainbow because it's a moving average of the open, high, low, and close. We're right at the high end here. And we're looking good longer term. We're above this R2 level and continuing to go up. So that's showing an improvement there. Showing an improvement with a trend here. The Heikin Ashi is now turning back positive. The Kigi chart is still negative, but it's pointing up. And the Renko has an open block here, so that's positive, and we're turning back positive with the 3-line break, so showing some improvement there. And we saw 3 X's drawn in here. X's are buying, O's are selling, and this is improving with the point and figure chart. Long term, we're still above this red line here, and I put this red line on here, so there's no magic to it. It's just a reference point. But when we get above that, a lot of times we can go a lot higher than where we're at, but this is when we're starting to look extreme. But you could also say, look at that good long-term momentum as well. We're getting above that level and still have a ways to go with the 150. And let's see, we're switching back across the board, positive with the S&P on all time frames. We're still negative with the mid caps and the small caps. And now we're turning back positive with the NASDAQ 100 across all time frames. So stocks have now switched back to positive. Bonds are positive based on price, where commodities and the dollar are negative on all time frames across the board. Did I say the dollar? The dollar and commodities. All of the sectors ended up being positive, with communication, discretionary. These are 2 growth areas. We want to see them doing better. Tech had a monster day on Wednesday, still was up again on Thursday. These are 3 areas that are real growth oriented. Staples were up. That's a defensive area, as are healthcare. And we've been keeping an eye on utilities and real estate, which also tend to be more defensive. And nothing but green or blue here. No Christmas going on. This is all St. Patrick's Day, according to what color you see. Some positive things with the NASDAQ crossing above certain levels. We got above 5,600 with the S&P. Even Canada got into the party there, setting a new all-time high. And staples, this is more defensive. It crossed with a BPI cross above 70. That's a little bit of a concern, but the tech sector had a bullish MACD crossover. And the S&P versus equal weight, both doing fairly well right now. Not really seeing one outperforming the other. Unless you look at this ratio, we continue to go up. That means the weighted version of the S&P is outperforming the equal weighted version. That means the bigger stocks are driving things higher. And then we look at a broad market of the 5-period moving average of the highs minus the lows. We're still above 0 here, even though this has been coming down. And the Dow was up over 0.5%, still looking okay, but not back to setting an all-time high yet. And we still continue to be positive with the Elders Impulse system for the diamonds. The NASDAQ, this could be another area to keep an eye on. We're just barely above the 50-day moving average here, but showing some improvement, up 1%, and a little bit above the moving average here with the NASDAQ 100. So the fact that we recaptured those 50-period moving averages is positive. Now we want to see, can we hold on to those? And we continue to be positive with the QQQs when looking at the Elders Impulse system. The momentum, it's still negative, but really improving. If we cross above this moving average, the momentum would turn back to positive. And we're above the 20, 50, and of course, well above the 200 here with the QQQs. This is really showing an improvement. The small caps, after coming down to their 200-day moving average, have been bouncing up. They were up 1.24%, but still below their 50-day moving average. And we're still neutral with the Elders Impulse system for the small caps. When we look at the Russell 2000 small caps, going back up, but still below 50 with the RSI, still below the 50-day moving average here, seeing a slight improvement with momentum, but still negative. And we're still below the 50-day moving average with the mid caps. We still are neutral when we look at the mid caps with the Elders Impulse system. This is encouraging too. The Wilshire 5000 was able to get back above for 2 days now, above the 50-day moving average, and that's turning the broader market more positive. We're also getting back above the 50-day moving average with our total US stock ETF. And the staples to tech ratio is going down, but we're just seeing a golden cross here with this ratio, meaning staples on a trending basis are starting to outperform tech. But we're seeing this going down, so it's contradicting itself a little bit here, but this going down would actually be more positive. And the financial sector coming down to its 50-day moving average and has been able to bounce up off of that, at least so far. FANG index just a little bit above its 50-day moving average. Can we get back above that moving average? That would be more positive. And we're above this longer term trend line, but we have not come back even to really test this shorter term trend line with the FANG index. Apple was virtually unchanged, but up slightly and at its 50-day moving average. Amazon was up 1.33% above its 50-day moving average, coming back up to its 50-day moving average after coming down to its 200-day moving average with Microsoft. And still below its 200-day moving average, but coming back up is Google, up 2.33%. And Meta came down to its 50-day moving average and is now going back up. This is where the strength in the index has been coming from. All these charts that I'm showing right now. Tesla was up 0.75%, getting a little bit further above its 50-day moving average. NVIDIA, just a little bit above its 50-day moving average after really falling down. It's been seeing a lot of buying lately. These are the stocks that really help the S&P to go higher. Netflix came down to its 50-day moving average and now bouncing back up off of that. And we're seeing a little bit of a weakness between the US stocks and world stocks on a shorter term basis, still pretty much flat with the longer term correlation. Oil is coming back up here, but still under 70. These are the defensive areas. Excuse me. These are the defensive areas that we're watching here. Utilities just continue to really be strong lately. Staples were up 0.62%, also still looking strong, a defensive area. Healthcare, another defensive area, was up over 1/3%. And then the dollar going down is actually helping stocks right now. The 10-year yield did go back up, or the 10-year based on price did come down. And here's the 10 to the 2-year yield curves, where it's back to being positive, which means it's switched back to normal. And this is another ratio we've been keeping an eye on. The Qs to the 3 to 7-year bonds. We came all the way down to the rainbow before and bounced up. We came down to the bottom of the rainbow here, and we're continuing to go up. That's showing an improvement. And I haven't shown this in a little while, but I'll show this over the weekend in the intermarket analysis video. We're coming back up out of the rainbow when we look at a ratio between home construction and 3 to 7-year bonds, because this is a very highly interest rate sensitive area. We're seeing some improvement here with our growth to value ratios going above the moving average here with the Qs to S&P. Discretionary has actually been doing better, and the moving average is starting to go up. We're crossing back above the moving average when we look at large cap growth versus large cap value. So we're seeing an improvement with the large caps coming up to the moving average of the mid caps and a little bit above the moving average with the small caps. This would be better if it was going up faster. This is the S&P to utilities ratio. We want this to go up if we're more positive. It really hasn't been moving all that much because utilities have been doing so well. This is coming down here. This is staples to the S&P. When it's coming down, that's more positive for the S&P. And then here is the criteria for a Hindenburg-Ullman, and here's the chart. We have not seen a confirmation, at least yet. So what's our outlook for Friday? We are turning positive and improving. Now, the reason I say turning positive is we still have some negative indicators that are improving but haven't switched over positive yet. We're going to get import-export prices and consumer sentiment on Friday. Consumer sentiment can have a bit of an impact. And then we want to keep an eye on all the geopolitical events going on just in case they have an impact on the market. And we'll be finishing out the economic calendar for the week. There's really nothing to see here. We've gone through what this calendar thinks are the most important reports of the week. Seasonality, we're neutral to positive with the Dow, where we're just flat out positive with the NASDAQ when we look at September 13th. And here is a look at some positive seasonality before we might see a little bit of weak seasonality going into next week. Friday is the second most positive day when we compare it to what happened in 2023. And it's also the second most positive day for what's been happening in 2024. And we're still coming up more into the middle part of this chart where we see okay seasonality on a historical basis going from 1950 to 2023. This is where we tend to see more weaker seasonality going into the latter part of September, and comparing 2023 to 2024 to see if they're going to play out in a similar fashion. So the warning signs, we want to keep an eye on these staples, utilities, and healthcare. Energy, at least for me, it's more of a geopolitical thing in case things really start to escalate in the Middle East. The S&P McClellan oscillator and summation index, they're still negative, but they are improving, but they haven't switched over positive yet. The oscillators are negative, but improving. The ease of movement is negative, but improving. You're going to see a lot of but improving here on this slide. The Swenlin trading oscillator, it actually has already turned positive with the volume. It hasn't quite crossed over positive based on price. The momentum is measured by the PPO for the NASDAQ 100, improving. The copy curve still pretty much negative, trying to turn up, but has a ways to go there. The vortex is still negative, but showing signs of an improvement there. And growth to value and discretionary to staples, they are improving, but we need to see more follow through with that to really drive the indexes higher. Positive sign, excuse me, positive signs. We're back to positive with accumulation distribution, the Chaikin money flow, and the Chaikin oscillator. These are our three smart money indicators that we tend to use as one group. The 5 and 10-day equity put call ratios are going down. That means there's less hedging going on, and folks are more positive on the market, so they're buying more calls than they are puts. The advanced decline lines are still hanging in there and showing some improvement, but the small caps are still below their moving average. And we're actually back to positive with the NYSE McClellan oscillator and summation index. The parabolic SARs just switched back over positive, and the bullish percent indexes are now all positive with the S&P, NASDAQ 100, and NYSE. The money flows back to positive. The ultimate oscillator is back to positive. And the financial sector, even though it's been getting hit a little bit over the last few days, it's still looking positive overall. So our conclusion, we're back to turning positive. So we're not full-blown positive, but we're switching over. Now, if you base this around moving averages, we're already positive. But if you're looking at this in conjunction with some other indicators like I do, I say it's turning positive and still improving. But we're going to need to see some follow-through upside for that to continue. In the short term, we are positive and we're back above the 20-period simple moving average. Then after Wednesday, we got back above the 50-period moving average. So we're positive there, and we continue to be positive in the long term. Thank you. I hope you found this helpful. Have a really good day, and I will talk to you in the next video.